G'day everyone, welcome back to Pete's Investing. Today's May the 19th, 2023. This is the spot gold price update. Now you can see here we've had a pretty big bearish candle for the week. So our weekly indicator is showing a neutral stance, although the daily is broken into a bearish signal. Let's drill down on each of these. So for those new to the channel, we look at our combined triple moving average of the price chart, moving average 3, 5 and 60. We compare that to the CCI 150 moving average 5 and 50, and if they align like it did back here, that gives us a bullish signal. That's where we trade on the lower time frames. So the weekly is primarily as a trend level setter, and on the daily you can see there the same indicator is used, combining the price chart and the CCI, and this is showing a bearish signal broken down since the last couple of days. Now we did have on the daily as well, before I go to the divergence, we did have this support down here at 1617, a resistance at 2082, and also if I zoom out, you'll see there, let me just make this a bit neater. We did have these diagonal trend lines cutting through the chart, and I'm going to leave those in there because what generally happens is, you can see there's a diagonal running through there. It was running along those bottoms, are hitting that diagonal, and then it's broken through that, and now it's probably going to hit this other descending diagonal. Now what we've got here as well, this was forecast back here. We had another divergence back here, just the historical purpose shown up here, but what's currently playing out is this divergence on the CCI along these. You can see there it's almost flat versus a bullish divergence on the price chart. And the way you trade that or execute it, or it might be just, I use it as primarily a potential trend reversal or even a slight correction indicator. So what it's done is you draw this channel between those highs down to the lowest lows in that channel only. You don't worry about anything outside of the divergence range. So between those lows, that's where the channel sits. And we said in the last video, when it breaks below that channel, which it did, we then set a target, and the target I've set is the closest to Fibonacci level to where that breakout was. So in this case it was the 50% level. So we put a little box there which indicates the 50% to the 61%. You can see there more closely it almost touched that top of the 50%. Now there's no guarantee it's going to enter that. It could always bounce to the upside, but there's a good possibility because we've got this descending diagonal, and it may well come and land on that diagonal halfway through that the Fibonacci levels, possibly. And again, there's no guarantee, but it's just a probability that we're looking at. So again, I use it as primarily a correction, as a potential bounce from there, or if it breaks through there and then it breaks through the 61%, then we're going to see a larger correction to the downside for gold. So that's where we are on the daily. So that would have been a nice little trade to take, possibly, with if you're open for that sort of risk. But again, I like to trade in the direction of the weekly and the daily, predominantly on the lower time frames. And the way you would trade that on the hourly, for example, would be to take, again, using that same CCI methodology with the moving averages. If you are trading long, take it when the candles break outside of the fractal, or if you're trading short based on the weekly and daily, trade when the candles break below the fractal. What I've got up here as well is a back test, and I'm showing this deliberately because we don't use stop losses, we use the average down approach. And you can see here the price is doing quite nicely. Then it hit this decline of the price. And it's actually, you saw that as a bit of a drawdown hit on your profitability had you traded the whole period on the hourly alone without using the weekly and the daily trends. And as I said, I prefer to trade in the direction of the weekly and the daily trends. So if you look there more closely, if I place the cursor there, you'll see there at the start of that, where that drawdown began, that was during the period of, if you look there that's during this period in the decline. You can see there on the price chart, that's during that period, that decline. So you would have avoided going long because the weekly and the daily were not in long positions. So again, I prefer to trade when the weekly and the daily are aligned. Gives you a better probability. So again, back here when the weekly was long, and back here when the daily was long as well, if you see that cursor showing up on that vertical line, that's where it started becoming more profitable again. So again, to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where I've got weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.